Yes, guys and girls, welcome back to another BMO video. It is Friday the 6th of Feb. Now, let's have a little look at what we've got, or what we've had, sorry, this week. Obviously, we did speak about it on Tuesday. Obviously, we was kind of waiting for today's breakdown, because obviously we had a lot of central bank meetings and some bits of bobs of data as well. So we'll go over that accordingly. But anyway, since Tuesday, we did speak about watching this. Unemployment rate did rise slightly. We'll have to have a double check as to the reason for that was. Employment change was a bit better, though. So I guess it kind of cancelled each other out. But we'll have a little look at it in a bit more detail later on. Then Wednesday, we had CPI from Europe coming in a little bit lower, which is generally okay. But again, people were mostly waiting for what the ECB was saying. And we'll go over that in a bit of detail. ADP was 22K though, so a little bit lower. ISM services were basically the same, but we'll look at the employment section of this as well when we move into the dollar. Then Thursday, we had the BOE. And, they weren't expected to do anything, as you can see, but the vote split was a bit more on the dovish side, basically suggesting that more people voted for cuts, which is this one here, than what was forecasted. People were expecting only 2 people to vote for cuts and 7 for a hold. But now it's very, very close, right? 5 for a hold, 4 for cuts. So it was quite finely balanced. And then obviously the pound reacted negatively to that idea. Then the ECB, they basically said nothing, to be honest with you. The euro essentially was sideways. We obviously did see a weaker pound, but overall, yeah, ECB was pretty dead, let's be honest. Then unemployment claims, we did rise to 231, but still within the norm. Jolts, and then obviously Lagarde. Jolts to 6.54. That's not a good sign, but it's a bit on the volatile side in terms of the data. So people do tend to look through that. But overall, yeah, we'll double check, how the dollar has kind of been since Tuesday. It's kind of a little bit higher, but a bit more consolidatory, I guess. McClem, he did speak. I've not seen too much news on him. Same for Bullock. She did speak as well. And then today, we've had nothing really. And all morning, Trump did speak. I haven't seen any news on Trump this morning of significance anyway, of significance. Then we just actually had the Canadian employment. So let me just refresh. And employment change from Canada, negative 24.8, not a good sign, but the unemployment rate did come in lower. So that's kind of contradictory to each other. Let's just double check and see how the CAD has reacted. So USD CAD, AED CAD, GCAD, a tiny bit stronger on the CAD front, but nothing too of a concern, I guess. Then University of Michigan consumer sentiment at 3 o'clock, as we know, is probably not going to do too much. People aren't too much focused on that. Nevertheless, done the DXY. This is Tuesday's breakdown. Around here is when we recorded. So we did come a little bit higher Wednesday, Thursday. But you can see it's not been like nice, forcefully high. Like this price action has been very choppy to the upside. We'll discuss it in a little bit more detail later on. We're seeing a little bit of weakness now. It's generally okay, but nevertheless, a little bit higher since Tuesday. AU, we've been quite choppy. Dollar yen, though, we have moved slightly higher, but sort of in consolidation now since about Thursday morning. Is there anything else? Gold, we've been quite choppy. We did break the structure, though. We did break this structure that we were speaking about. So we did come a little bit lower. And then we kind of pushing back a bit higher now. I don't know if you've been looking at BTC, but that has sold off quite a lot. But nevertheless, overall, since Tuesday, price action-wise has been not amazing. It's been pretty quiet. But we have had a fair bit of news. I don't know why markets aren't really reacting too much to it. But nevertheless, that is myself on the news. Let's move straight into the dollar, the pound, and the euro. So the USD. Now let's have a little look. I mean, obviously data-wise, there's still that partial lockdown. So it's a bit unfortunate we would have had NFP by now, but it is what it is. But I believe it may get pushed to next week. So let's see if that actually does happen. Let me just double check the calendar and see if it is on there yet. And not yet. So we'll just have to see, when it does finally see some news about it coming back out of that partial lockdown, then we'll have a good idea of when. But yeah, right now on this calendar, on Forex Factory, it's not showing that there is NFP the next week. But that's just obviously up to when it's actually out of its partial lockdown. So just keep up to date with that news, and then you'll know whether or not we're going to see NFP that week, or is it going to get delayed further. Nevertheless, let's have a little look at some news-wise. Obviously, like I said, it's mostly some bits and bobs of data. I mean, if you take it on face value, it's not amazing data. Obviously, ISM manufacturing was pretty decent, and we did see a bit of dollar strength on sort of Monday. But since then, ADP has been meh. ISM services, let's just quickly double check the employment section of that, because that's kind of what markets are a little bit focused on. So let's just double check that now. Review report and scroll down. And then employment has been just about positive. What else have we had? Unemployment claims did rise to 231, but like I said at the start, it's generally normal figures, so that's not too much of a big deal. Job openings, obviously that's not a good figure. It is lower, and it does kind of support the lower ADP and sort of just about positive employment. It did contract slightly from the previous print, though, so it came in a little bit lower. That would, on paper, suggest NFP is not good. Whether or not the unemployment rate is hard to say, but NFP would have technically have been not good. However, markets right now are kind of in limbo, I guess. In limbo. They've got a lot of things battling each of the market in terms of what they need to focus on. So let's just quickly have a little look what ING said. I believe, actually, we'll read through this one a bit later on. B of A, Bank of America, thoughts on the dollar and the euro as the dust settles. So we'll have a little look as to what they're saying about the dollar. And of course, we'll look at the euro accordingly. But let's just double check what ING has to say about the dollar. Remember, they were expecting a little bit of a stronger dollar, same with us, just because, again, like it's all died down with Trump now. It doesn't really make sense for the dollar to be this weak at this point in stage, but it's more just a pullback to then eventually go back lower again. But for now, we will be trading that sort of pullback because it does make sense from a sort of dust, like they said, dust settling perspective. Some temporary calm has returned to financial markets where precious metals are moderately higher, equities futures are off their lows, Bitcoin has found some buyers. Supporting markets may be the view that the Fed is ready to run the rescue again. Here, the 1 month OAS 1 year forward has fallen 12 basis points this week towards 3%. That would mark the Fed's policy rate being taken lower end to the lower end of most estimates of the neutral range. Helping that adjustment is the Fed pricing with some surprisingly soft US labor market data released yesterday at the odds with the Beige Book survey evidence provided to the central bank ahead of its January meeting. This will bring increased focus on the December NFP jobs report released next Wednesday. Okay, I didn't see that. It was Friday next week. Cool. So it is there. I was looking at Friday, but okay, cool. Wednesday, perfecto. So that'll be good then. But like I said, on the margin, based on the data that we've seen, doesn't really support like a really good NFP print. But let's obviously see it. Like that's just a rough gauge. Remember, like you can roughly gauge what it is, whether it's going to be better or worse. But you should never really predict what the print is, i.e., like saying, okay, I'm now going to buy or sell the dollar because of X, Y, and Z. So it's best to wait for these big data sets to come through, let the dust settle. So an hour or two later, then assess it, and then get in on the pullback. Or, if you're on a trade already, then that's obviously supportive for the hold still. This will bring increased focus for NFP jobs next Wednesday. It's very difficult to say whether US tech stocks will have another large leg lower. All that can be said is that longer term, cyclically adjusted price return, that's equities. Arguably, the dollar should have performed better during this recent corrective period. The DXY rally to 98 might be enough for the time being, and we would not want to chase it higher. I'd agree with that. So right now we're at 97.7, maybe a tiny bit, but wouldn't the maximum high that I would say is probably more so towards 98,400. I think we did speak about that figure last on Tuesday, just because it's the previous high. And I don't think there's a reason for it to trade all the way back above it. But, let's kind of see what next week's data comes through. Remember, I guess if people do look at, how currencies perform during certain months, February tends to be a good month for the dollar, but there has to be a reason for that to happen. Remember, it doesn't just have to happen because historically February has been good for the dollar. It's only if it helps it in terms of the context, right? And if the context is, this week's data has not been good, and NFP's next week confirms that trend, then I guess there's no reason for the dollar to be stronger. So it does kind of balance on Wednesday next week as to whether or not we do get a little bit of a stronger dollar and then a sell-off, or whether or not we do start to sell off from here. But today there'll be University of Michigan. Obviously, we're not really too focused on that, to be honest. It doesn't seem like there will be any reason for that to happen elsewhere, or for it to be as of significance. Elsewhere, it looks as though the market is positioned along dollar yen heading into Sunday's election. The outcome should be known by the time of Asian Monday open, and volatility looks assured. I guess we'll open that up in the new tab. We'll read through that. Now, by B of A, they do talk about the dollar and the euro, and we'll have a little look as to what they say about that. They say, as the dollar finds footing, we note the ongoing hype around the debasement theme. We are bearish the dollar, but we feel this is premature. We look for gradual, not rapid dollar depreciation for both US and non-US reasons. Here, we look at closer at bullish euro factors. So they say according to them, it's going to be gradual. So nice little trend. As long as it doesn't sort of collapse to the floor, we obviously don't want that. You want it where it's, gradually coming in lower, just because it's a lot easier to trade through that period. When it's like collapsing and like really driving lower, if you're in a trade already, it's amazing. But trying to get into a trade is quite difficult. So what we want is, or it's a lot more risky because you're trying to be quite aggressive on the entry. Although you might have the direction, the entry has to be quite aggressive. Whereas if it's nice and gradual, you have a nice sell-off, and then a nice big pullback, and then a nice sell-off. Like, that's the sort of market we want to be in, basically. But evidence thus far does not support these claims. The Sell America support these claims. Although we do remain attentive going forward, we envision FX hedging as a much more plausible bridge between these potential risks and how investors are likely to react. Elsewhere, we maintain a constructive view on the euro side of the equation, which we cover in detail in this report. Overall, we look for dollar to grind lower versus several G10 for both the US and non-US centric reasons. So like I said, we are bearish the dollar as well. It does make sense. There's not like that dollar smile that does support it. There's nothing in there that tells us either dollar has to strengthen through risk sentiment, and the other side of the equation is dollar outperformance, right? It's not really outperforming, shall we say, versus other people. As the dollar dust settles, they say over the past week, dollar's found its footing. So this was written on the 5th, so yesterday. So it's quite relevant. After it's found a footing after the DXY fresh low, we see dollar's recent consolidation as driven by a combination of Besant reiterating US land standing of strong dollar and confirmation that the US has not intervened in the nomination of Kevin Walsh for the next chair, and the market's particularly attention to his well-known hawkish stance on the Fed's balance sheet. We think the jury is still out on this, given his stance designed for lower rates, but was seemingly enough to spark dollar consolidation. Again, we have spoken about this, I think, Tuesday or Friday last week, about how he is technically hawkish from his previous comments, but has that changed or not? We have to see when he talks next. The notably above expectations of ISM manufacturing print, which is at its highest level in 3.5 years. I guess so. If you look at it from that, the dollar did strengthen on Monday based on ISM manufacturing. But yeah, I guess that would make a little bit of sense as to why it hasn't sold off in terms of the dollar. What we now need to think is, okay, cool. So Trump really probably isn't the main driver anymore. Again, just think about this week even. Has there been a lot of news that you've seen that suggests dollar weakness because of Trump? I would probably say not, right? I flick through everywhere. I've not seen anywhere that says, oh, Trump's saying this, and then dollar's really reacting accordingly. That kind of tells you that markets are no longer focused on it. So you can't be like, I want to sell the dollar because of Trump. He's not the focal point anymore. The focal point for markets is what they've said here. Wash, so when he talks next, has he changed his view? The US data, and I guess what they say about, what's mentioned in like conferences or any speeches around Fed members. That to me is right now the only reasonings for you to watch when you look at the dollar. That's why if you think about next Wednesday when we have NFP, and of course the unemployment rate, think about how that will impact these ideas, right? How would it impact what Besant says? How would it impact how Walsh reacts? And obviously how generally markets react to weakness in the dollar or weakness in the data that suggests dollar weakness. So basically you'll think, okay, cool. Data's weaker. This now suggests what? More rate cuts, right? Dollar comes in lower. So you remain bearish the dollar on that front until your idea changes, or at least until the data gets better. Has that really occurred recently? Probably not. So always just think opposite to why the strength is already here. And that's what we were, thinking about as well. So maybe we do pull back a little bit higher in the DXY. It's difficult to see. We'll only have a confirmation as to, okay, now we need to get into sales, or it can probably come a little bit higher and then we come lower. And that's mostly going to be driven by the NFP print next week. But obviously what they're saying here as well is, Euro factors, German fiscal stimulus, blah, blah, blah. We all know that already. So that's externally why you should be bearish the dollar as well, because the stimulus package from Germany should support growth in Europe. As a result, that should start to contrast, right, against the US, where the US NFP, maybe a rising unemployment rate, is showing issues, whereas Germany might be starting to come out, starting to expand. And there's the divergence there. And now, obviously, that's when you want to be in long euro dollar, for example, and obviously other euro trades out there as well. But you get the gist, right? You just need to think, what is why is the dollar somewhat okay right now? Trump has died down. The data is relatively, we saw okay NFP and MIPRO, but since then we've seen a little bit worse data and we have started coming low on the dollar. Cool. Wash's previous comments was hawkish in terms of, before he was announced. That's fine. So we can't trade that yet because we need to see him talk. Once he talks and he shows bearish intent, that's another checkbox that removes the reason why the dollar is held up pretty well. And that's all you're doing, is you're just following what is driving the currency right now. And is there anything in the future that could change that idea? And how likely is that to change it? And obviously that comes down to sort of experience and context. But that takes time to build. But yeah, apart from that, that's myself on the dollar. Again, I've not got much too much else to add on. It's mostly just the data this week. So obviously it's not been good since the, PMI print on Monday. So overall, the dollar may start to top out. We will have that confirmation on Wednesday. Unless ANP is actually a lot better and the unemployment rate is okay, then you'd see a push towards these highs here. If not, this would be the top. But I'm not going to trade the top until I have confirmation. Hopefully that makes sense. So yeah, in terms of technicals, let's have a little look. It's been quite choppy, let's be honest. I'll leave it alone because there is a possibility we now start to sell the dollar off next week. But this is technically the breaker structure, right? Because this low made the high because that closed above that high there. Cool. So that's a breakup structure. But I'm not going to trade, even though we break structure, I'm not going to trade it because I want to wait for Wednesday and then we have the confirmation. I don't want to get in and say, let's say we start breaking structure, we pull back Monday, Tuesday, try and sell it at a supply zone somewhere, I don't know, there. And then we get in, goes in a bit of profit, NFP comes out, and then we go straight to stop loss or straight to break even. I don't want to do that. What I want is confirmation. So if we come in lower here and then does that and then NFP comes in, then we'll just get in on the pullback. It's not that big of a deal. So that's what I am going to do. So yeah, and dollar CAD, definitely something to watch for next week. So I'm waiting for something like this to occur, like that. Dollar Swiss, though we have technically broken structure, the data since then has kind of topped the dollar out, which is fine. I don't think I want to get in this though, because Swiss is not good either. Doesn't really make sense for me to get in. Dollar yen, this is a tricky one. I think what we need to do, obviously it's Friday, so we don't want to be entering, especially in the afternoon. So what we'll do then is, because obviously we do have the Japanese elections on the Sunday, I think it's Sunday. Yeah, Sunday. We'll know by, London Open, or at least by a maximum of London Open. We should know it by market open. But if not, at least by London Open, we'll sort of know what's going on. We'll see how the yen reacts. And then we can make an assumption, because if it's not good in terms of the yen, then I guess there's no reason for dollar yen to sell off. So right now I will leave it alone, see what happens on Sunday, and then make an assumption from that. Because if it's pretty good for the yen, or at least we see some positive outcomes, and then we start to see NFP coming lower and sort of the data start to suggest more rate cuts, then dollar yen will start topping out. But until then, we have that confirmation. We're not going to trade, are we? So March-wise, you can see people still expect to hold. April, still a hold. And then June, I think, is the start of a cut. That can obviously be brought forward. So we just need to see if anything will happen, because the data will tell us it will happen. So for now, I will leave dollar yen alone until we have confirmation from at least maximum by Wednesday because of NFP. But hopefully a good idea based on Sunday's election results. But yeah, apart from that, that is myself on the dollar. In regards to the pound. Now, this week we did, of course, have the BOE, as you can see. The vote split is not good in terms of